Okay, everyone, welcome to the seminar. As we mentioned on the weekend overview, the market is a toss. In other words, after we did the whole day yesterday and over around 80 charts in about 20 and change pairs, we draw the same conclusion. I mean, you got to play smart. You got to play Elliott Wave until the market define which one is going to be the next move from the market. Otherwise, you have no clue. I mean, you cannot become a dollar bull because, all right, maybe you're right. You cannot become a dollar bear because maybe you're wrong. So it's a toss. So what we would like to do in the presentation today is showing you why we are still favoring the idea that we are in the E wave of the daily triangle on the euro, on the cable, most of the pairs, and we are in some type of B wave before the market do the final push and risk and then going lower. Now, but also we would like to let you know why we are recommending buying the dollar sometimes either tonight or tomorrow, and see after that buying which direction the market goes. Now, we're going to start. This is oil on the daily. On the oil on the daily, okay, this is oil on the daily. Oil can be showing, if you take a look at the chart, with at an eternity count this past yesterday all day, when the principal count goes like A, B, C, W, S, A, B, C, Y. Now, if you guys remember, when we were around here, we were calling risk higher only because of the idea that we saw two equal legs right here ending a possible double zigzag cycle. You see, two equal legs, that's telling you that most likely is going to go high. Now, there is another way to count this when it is A, and in regular B and a C. Now, what I like about that scenario is that if you take a look, this is the sharper decline. This is another sharper decline. In other words, this looks corrective. So technically, you can have A, B, C ending here, and that being the case, you got a flat B wave or S when you have A, B, and this is a sharp recovery. We have all the look of a flat. Now, it's very easy now to say it. At this stage, when we were right here, you have to play the idea that this is nothing more than it's going to take a look of a three-way. This is very important as we speak, but I believe that this recovery is not completed. Now, you can count it, and looking only on the closing here, you can go 1, 2, 1, 2, 3, 4, 5. This is wave 3 and 4, 5. Now, the idea of that count, looking at the close, is that the wave 5 cannot pass this area, because about here 5 is going to be bigger than 3. So, but that's looking at the close. Looking at a regular candlestick, like if you guys can take a look here, let me put the candlestick. What is oil? You guys gonna see that it looks different. All right, you guys gonna see that it looks different because this decline right here, you didn't get a new high at the closing basis here, and this decline getting to this area. So best way to labor in looking at the candlestick is 1 and in regular 2, and then from here, 1, 2, and then 1 and in regular 2 within 3, wave 3, and then 4, 3 of 3, 4, and what we ending is possible wave 3 right there. What do we say now? I was talking to Isa yesterday. I was telling you that the idea that this recovery is getting close to the 1.618 right here, it makes me suspicious that what we ending is wave 3. Now, if we ending wave 3 in oil, we're going to get a decline in oil into the wave 4, and another push higher, that is going to take oil to around the 76.4 area of this whole decline. Now, that being the case, you gotta look with this pattern within the market. Now, there is nothing wrong to sell oil around this area. Oil looks very topping. If you take a look from here, you can count 1, 2, 3, 4, 5. This has the look of a wave 5. Now, the degree, it needs to be determined if it's the wave 4 or this is the whole wave 5. Like I say, looking at the closing, it looks like a complete cycle. Looking at the candlestick, it looks like it's not the case. So, with that in mind, what we're recommending is that we need to sell the next strength or the next weakness within the dollar. We explained on the daily video and the technical video yesterday the reasons why. Now, this is oil. Let's move on a little bit from oil now, and let's put oil in the closing again, and then let's put another pair on top on the oil. That pair, the green one, is cable. Cable, as you guys know, is one of the cables, is the pair that have the most clear structure on the daily, on the weekly chart. That structure is calling for the triangle, which is very, very well defined. Now, like we have repeated several times over the last 10 days, the decline, if this was, let's put cable here, this is the daily, right? Yeah, let me put cable on the weekly. So for the new guys right there, you guys understand what I'm talking about. This is an Elliott Wave triangle that it runs like this. Remember, this is closing. It goes like A, B, C, D. Now, the huge question for everyone is if this is the whole E or the market is going to do a B and a C within E. This is the 618 of the D way. Minimum target is reached. So you have to attack it. Now, this is what we are proposing, and that goes pretty well with oil. Now, getting back to the daily, right here, if that was the case and cable finished the E wave right here, the declining cable needs to be impulsed to the downside. That's not being the case. This is corrected. That's what we favor in this scenario. When this is going to be the wave 4 in oil, and then this is going to be the C wave or the 5th wave in oil, making the case for the good correlation in risk right there, right? Now, let me put oil again back in place. And then what we're proposing in oil, a wave 4 and a wave 5, a wave B and a wave C. That's going to take the market to be in, that's going to take the market is now doing a B wave within the B wave of the market, but no matter of the correction, but no matter what it is, a run in favor of the reservation is going to happen, should happen this week within the market. Now, how do we play another risk pair? And then we're going to add now the euro dollar. On the euro dollar, what you have? The euro dollar, you have the same scenario. You have that the euro recover, you guys see a difference, different pairs in how they correlate. Now, the euro dollar, like every risk pair, remember guys, about a month ago or a month and a half ago, I believe the first week of October, I believe it was October the 10th. I know that the bounce happened October the 7th, but we're saying that we are correcting the move that started in May the 4th. And then that move, the big question, like it was wrote on the overview yesterday, is if the correction of that whole move is over. Nobody have the holy grail to say if that being the case. Only as a professional trader, you need to find different tools that can show you the path and then don't get into the trap of the market. And that's what we're trying to look right here. Ideally, nobody knows if this is all that what happened on October the 27th was the end of that correction. Now, looking at oil, looking at cable, I tend to point the idea that we are in the B way and that the market is also looking at the Euro index, that the market is going to do this, is going to soar this week most likely into the C way in risk. The flat is taking place on the B way, and then the risk trade is going to take over. You need to go with that path onto the market prove you wrong. Now, that for the new guys, the old guys, you don't need that to know that there is something that is called Elliott Wave aging. And that's how you need to play the market this coming week. Now, another risk component is Dr. Copper. Dr. Copper is the blue one. You guys see October the 7th, create a bottom and recovering. Now, if you take a look at copper only by itself, you're going to notice this, that it recovered like a repair onto the end of October. After the end of October, if we're going to put, let me put the candlestick in copper right here. Look, let me go more like in an hour chart, and you guys gonna see on the hour chart that he did. Let me contract it a bit, and then he did 1, 2, 3, 4, 5, 1, 2, 3. That's one of the reasons. If you guys watch the seminar for last week, that was one of the reasons why last week we say that we knew that some degree a market is gonna drop down in reservation. You guys remember, that's exactly what happened. Now, this is very interesting. Look, because you have the clear move in 5 ways in copper, and you have a clear 3 back. But this is a 3-way in copper. That's a 3-way in copper, in my opinion. You have 1, 2, 3, 4, and you got 5 swing, but it looks like a flat because this looks important, very big compare, and then the best way to count it is ABC, B, and then ABC, I'm sorry, A, B, C, B, and a flat. Do you guys agree with me? Otherwise is ABC completed to the downside and this becoming bullish, right? So you can count it A, B, and we're working on the flat C way. Or in the case of Cooper, because there is a 5 swing when the wave 3 is bigger than the 1, I mean, I don't like it like that. I like it as a flat B way idea because that's a flat within the flat that is present in almost every pair around the market. Now, that being the case, what's going to happen with copper is that copper is going to go higher and then it's going to fail. And then that's going to also play the game of the risk C way on reservation. Now, this is copper on the daily. As you guys know, we've been mentioning the idea on the daily that we have a 3-way move to the downside from the top right here. We have a 3-way move, and we are correcting again the May 4 cycle. I got a good friend and trader that he trade based on times, and that goes pretty well with his system. Now, right here, we mentioned the last week that the correction that we have in 3-way and copper was very shallow. So maybe this is what copper is going to do. Copper is going to do a B-way flat, get deep, test the lows, and rebounds. And that goes pretty well also with the idea that we are in the C way. We are ending the B way of the C way of the E or the B way in the whole risk. I know you guys got crazy when all that, letters that are cycles that is present there, but that's what I'm getting outside of the market correlation after doing the whole weekend of day. That's the conclusion that we draw. Now, let's take copper out. Let's put the euro dollar. And then we're going to see the euro dollar together with oil. Look, I'm sorry, with the dollar. Yeah, to finish 6 a bit and then probably higher. That's exactly what I mean, Rafi. But you have to sell the euro. That's what I'm trying to say. Because there is no guarantee that you're going to the C. That's going to be a C way. It can be the move. You know what I mean? The move that you dream about it. That can be the case. So technically, here you have the euro and you have the dollar. As you guys know, the euro and the dollar, they are completely inverse when it comes to correlation. Now, look, what we're seeing on the euro is the same with the dollar. Let's take the dollar, let's leave the euro. What you have, this is on the daily, May 4, May 7. Now, the big question that everyone has is this the whole correction? Why? Because in our favor count, as you guys know, let me contract it a bit, saying 160, this is 160 on the euro. What we have is, let me put the weekly so you guys understand where we are. Our favor counts comes with A and then A, B, C, D, E in a daily triangle with a move coming either from here or coming from the area, a triangle like this. That's what I mean. Coming from here or from 145, 146 and move to the equal legs when this leg is going to equal this one. That's our preferred count right now. But nobody have the whole degree to know if this, yeah, it's very contracting, agree. Maybe we are in the B way or the D way. That's another possibility. And then the euro is going to go here and then bouncing again back to the upside. That's another possibility. Yes. That's what you mean, right? Something like that. Exactly. That's another possibility. I know, Zach, that doesn't work with you on the time. Goes with, exactly, but that's going to deny many market correlation. But let's not get, guys, in a gains of a speculation because nobody trades technically in this time frame. Now, what is clear on the euro looking at the 60-minute chart is that you have a questionable move right here, and then you have a move in 3 right here and a move in 3 right here. We took the short, we break almost even right here. It looks like there is a gap on the euro, and it looks like this is a flat. Most likely, nobody knows if it's a flat or it's not a flat. All that we're trying to advise to you, and we're going to do it on the service, is that after you see 5 ways from this low around 139, you should fade the high right here. And you should see how the market goes. From there, the market is going to go either to 134, the market is going to go either in 3-way move and goes higher to 147. Oh my gosh, what I did right here. Oh man, 1 second. The market is going to, oh my, 1 second. I did a mistake. Either the market going to go to the 147, or either the market, if that being the case, also if it's the expanded triangle, the market can go lower. That's what we mean with the market correlation. I understand that all you guys got the idea. Now, let's move on and let's take a look at the US dollar index only by itself. The US dollar index by itself, this is what we see. Technically, one second, I don't know why I'm not getting the correct count right here. Technically, the US dollar index, I'm going to take these labels out and I'm going to play the count for you guys. A cent is going to technically descend. You got October the 2nd, the beginning of the month, the big correction in risk, when the dollar trade lower. Now, the question that everyone has, is this enough to be the wave 2 in the proposal nest? I mean, or this is, Rafi, one second, I'm going to answer all those questions after. I mean, this is all we have in a proposal wave 2 of a proposal bullish US dollar nest, or this is W, and then what we have is a flat B, and then the dollar is going to trade lower to around this area and give us another change here. Or this is one, we have a flat 2 and higher. This type of a structure is very, very weird to find that structure in a wave 2. There are no comments on the wave 2. Flat, there are more a structure of a running flat is more like an structure. On a regular flat is more like an structure of a B wave or wave 4, no like a wave 2. So, but this is the message. No matter what it is, if this is the B wave flat, then you're going to get a C coming in. You have to buy the dollar around this area, 120, 139 on the euro. If this is already W and this is S, being this A, B, C, no matter what it is, you're going to get A, B, C. If the oil is going to top around 100 and it's going to crash, and then the dollar is going to get strong, guess what? You got 1, and a flat 2, and the dollar is going to go higher. So the message is that Elliott Wave edging, you have to buy the dollar when the euro, I'm going to mention the euro, when the euro is around 139, because you don't know exactly what the market is going to do right there. All you need to know right there is that the market is going to make a move in favor of the dollar, because you see a 5 ways coming in. You guys got it, right? Now, let's move on pretty fast to the S&P, because S&P, believe it or you guys or no, is giving there a lot of hints, and then you have to take a look at it right there. Okay, this is the S&P. S&P, let me open it. Don't worry about anything that happened before October 27. You got 5 ways in the S&P. You have 5 ways in the S&P, a possible 5 ways on the S&P. There are 5 ways, let's say, in the dailies. And then you have a 3 ways, no question about it, that ended at this high around 1289. Now, from there, what you have? A possible 5 ways, a clear corrective move, and we are favoring this count. You have A, B, C, A, higher degree, A, B, C, B, and what are you expecting on the S&P? 1, 2, 3, 4, 5. A flat. Now, a point that I want to make is that when the whole market last week broke the low that happened right here around the November the 4th, I believe, the S&P didn't make it, making the case that this is a whole corrective move and making the case that this low should be broken in some times and making the case for the seaway lowering risk. Right? That's the case. Now, I want to make the point. I can see 5 swings coming here, but this is too sharp and too short in time to be at wave 2 of this 5 win. Yeah, what I mean with that is this. If you overlay, let me do it for 1 second. Sorry, let me do it here so you guys know what I mean. That's very important. Yes, I agree. Let me try to do it here in live. If you guys do not mind, I can do it in 2 minutes. But that's very important. Zach, you know, I know your system, how it works, and you know that I love, Zach, your system, and you know that I use all those little hints when it comes to this market. Give me 1 second. Okay, here we go. 60 minutes. Let's put S&P, this one. I'm going to use it only with the euro and the dollar. That's technically all you need. You can make the case with a flat. Yes, exactly. That's extremely good point of view. Very good point. So you got New Zealand, you got the dollar, the euro, S&P. Let's put Aussie. Okay. Okay. This is the whole idea, guys. Now, give me 1 second. Let me put some colors there so you guys do not get lost. But this is how the market needs to be seen, guys. Okay. 60 minutes. Who understand that? If you show to the regular people, say, are you guys crazy? Okay. I don't know, Rafi. I don't have. Okay, this is the S&P, only by itself. What I'm trying to say is that this law is very important. Yeah, in that I agree with you. This law that happens on November the 4th is very important. Why? Because if this is a 5-way move, which can be the case, if this is a 5-way move right here, this law needs to be taken. Now, let me put the euro on top of that. What happened? You got the low here, and the low is broken, right? Let me add now another pair. You have cable. The low is here, the low is broken, but if you have in cable, which is the blue, A, B, or you have W, This is the low in cable, I'm sorry. And you have W, and you have the count with the flat V wave, and now a C wave flat, you can make the case that the low is not broken. Now, let me add the dollar cap. You have the high here, because it's inverse, and you can make the case that in a flat, it didn't broke it. And then finally, you have, let me take and let me look only at the dollar index against the S&P. Right. You have the low in the S&P, the high in the dollar, and you can make the case that this breaking right here of the high is a flat. So my conclusion is that that's why we're saying that the 5 ways on the dollar needs to be faded. Because looking at the S&P, I can tell you guys with the 95% insurance now that we are in a flat B way on the dollar, or wave 2 in the dollar, that being the case. You guys got the whole idea, Zach, everyone right there? And that's very important. That's why the market correlation is one of the most powerful tools that you can play when you trade. If you trade and you don't use market correlation, I mean, so you are lost in the market. Yes, I agree with you that the move from October the 27th is corrective, in my view. It's going to end being corrected with another high coming on the C wave. That's my, anybody has problem with the audio? I know, Ryan, that's my goal. And I've been saying, most of you guys, that we want to get long risk. Yeah, one more low between 131.50, 134.84 on the euro should make it minimum. Let's put it like that. I don't want to say that it cannot be the case. All right, that's for the S&P and that. Now let's move on pretty fast to the individual pairs, guys, for a second. Let's put right here the euro dollar. And then I want you guys to have the idea. The idea is that you need to play what is called Elliott Wave edging. Elliott Wave edging is calling for dollar strength pretty soon. One second, sometimes this take about a minute. So like right here, there you go. Okay, the euro is gapping out. It's 37.80 at 79 at the moment. Now, let's put the candle so you guys understand my meaning right here with the euro. And this can be the case for almost every pair. This is the euro dollar at the moment. It did a high at 37.87. It's 37.80 right now. Now, the euro, what I'm trying to mean and what we wrote over the overview over the weekend is that the euro can have different scenarios, like the whole market. Now, if you don't use Elliott correlations, you're going to get lost. Now, this is the low that means you can label it as it is right now. A B, and a C way high on the flat. This is our preferred count at the moment. Now, what you can expect and what we recommend, and I was telling DB yesterday that the entry that we have on the euro dollar at 39.20, we're going to activate the entry later on today because maybe the entry was valid and it's still in place. Because what we recommend is this, selling the dollar around 39.20. Why? Because the same scenario. Let's say that this is the worst of the case and we have A, B, C, and sorry, the worst of the case to the dollar bulls. And then the euro create the B wave here. In other words, S was created here. This is what the euro is going to do. It's going to end at the B wave here. It's going to do this. It's going to get back to 36.70 and it's going to explode to the outside. But at least if you fade it here, you're able to take 200 picks to the downside and profit. That's what it means. That's the worst case scenario for the popular dollar bulls. Now, if it's a flat, guess what? 39.20 is going to go to around 133, 134.06 area. And then if this is E or this is B or D in a daily triangle, it's going to go to 134 and or it's going to go to 128, 129. Do not matter. Every count goes Elliott Wave edging. That's why you need to sell it after you identify that to finish D. Yes, that's one of the scenarios also. To identify anyway, no matter what it is, it's going to go to at least 136 out of around 139. That's our favorite trade for the week, and that's what we're planning to do in the euro, and in some case it can be that can happen around Tuesday or Monday night. But I want you guys to get that idea. We are favoring the idea that this is a big wave that is going to go to 134 and it's going to bounce from there. That's the idea that we're favoring. That's for the euro, guys. It can be seen all around the market. I mean, you can go to pairs like Aussie, and it can be seen there also. CAT around 1 should be a very good buy. Aussie, I received a very good email for a member today. I believe that he's here. He doesn't participate too much of the room or anything. Yeah, he's here. How you doing, my friend? Yakub. That's your name, right? I'm sorry if you mispronounce. So he makes the case that is a very good point, that Aussie is looking corrected from here, and that's a solid point. They lose the scent to almost everywhere, guys, every pair. Now, I'm going to do this for him. He knows, he looks very knowledgeable the earlier way. This is a 15-minute Aussie. Like in the euro, it looks like they did a flat right here. Remember, Zach, the 5 ways on the euro on Thursday that you and me, we were playing to the downside? Come on, man. Why you say that? Look at Ralphie. Now he's saying that this here there won't be no NBA. Look at that in the middle of the seminar. Unbelievable. This is like 1, 2 in a flat, and then again, it's the same scenario everywhere. You have another 1, another 2, a possible, another 1, another 2. I mean, you mean, Michael, in the whole overall count, right? And then possible, I told DV the other day, DV is Aussie is not doing a flat, I quit. And then technically what you have is 1, 2, 3, 4. It looks like it's gapping up a bit. 3, 4, something like that. Now, I want to be clear. This looks impulsive. And technically all you have from the lows is a 3-way move. But that's how we see him, Jakub. I'm sorry if I mispronounced the name. That's how we see it, my friend. And I mean, sometimes you gotta go for what the whole market. I mean, you have to go with what the whole market is showing, and I believe that Aussie is gonna go to what everyone also is calling against. Anyway, you have to fade the same things again. You have to fade 5 ways in Aussie and see what happened around the 104 popular area that everyone was spreading, even the 105 area. You have to sell it. You agree with that, DV? I know you are the Aussie guy. That's my point. Even I can go in this. You see 1, 2, 3, 4, 5. You have to fade this. You have to fade. Yes. You have to fade. This is more flat right here, only in case that it did. I think not this one, the next one around this resistant area, just in case that it did another flat right here. That's what I meant. That's for Aussie. Let's move on to cable. This is what we favor in cable. A, B, C, W, A, B, C, A, B with a flat. Let me see, because sometimes you can get confused in many A's and B's. One second. This is, yeah, another flat. So let me correct it. I believe that started here. And then you have A, B, C, and a flat here. Oh my God, how it is. Right here. This A, I believe, goes right here. And then you have A, a B, and a CB right here. And you end in C. Something like that. But do not matter. From here, what it matters is that you're going to get 1, 2, 3, 4, 5. You need to sell cable around this area. And then where you mean triangle from where? From here? You have to sell it. Yes, you have to sell it. Even the S&P can be in a triangle. So maybe, yes. And even S&P can be in a triangle, and then you have to sell it. Don't get caught, guys, in the whole overall structure. If I was a cable trader, you need to get right here. 1, 2, very clear. We said the other day in the forum that cable should be bought around there. And we're going to have, guys, we're going to send an email later, to the members, that about a lot of new things they're going to start doing in this week, including posting traded preposition in the out days with a charge. Like if you do it here, we're going to say, I know, I saw it. Very good. Like if we're doing that day in the morning on Friday, we say we recommend buying cable around this area against this top. And then you guys take the decision to do whatever you guys want to do. Now, all you need to care now is 1, 2, 3, 4, and 5. Right here, you need to say cable. You identify the wave 3. You need to fake cable right there. That's what you need to do. So that's for cable, and that goes moving on. Let's show you the dollar CAD also. Look at CAD. Look, CAD is posting, like we say, it can be 1, 2, 1, A, B, C within the flat with another move higher. But this also can be A, B, C, W, S, and possible completed here. Do not matter. What it matters is that around 1, CAD should be bought. Why? Because if this is the top of B, guess what? This is going to do 3 ways back. That's how you need to play the market this coming week. Any pair of guys that you guys want to show me or want to ask me? Let me take a look real quick right here at the Norwegian krone. The Norwegian krone is very interesting. It's supporting the flat in some degrees. But the alternative is very bearish to the dollar. Be the alternative here, a triangle B, and a C way. Now, if you take a look at I agree, Rafi, I agree with that. You know that that's my team. Look. I don't know what I'm getting discharged. Let me take the labeling here to the Norwegian. Now, the Norwegian, you can label it. If you got very deep into the RSI, you're going to see that the first divergence is right here. That's a complete 5. And then from there, starting from here, you also have divergence in this high. So that's another complete 5 in the Norwegian. So now, what is right here also can be 1, 2, 3 to here, 1, 2, 3, and again, the flat can be there. So, but if you end it here, you also, let me see, 1, 2, 3, 4, 5. Yeah, but the move is a flat, guys. I mean, it's a flat. Now, the Singapore dollar is the only structure within the flat that I really don't like it. It can be laboring as a flat, but it's the only one that I really do not like it. Looking at the RSI, again, you come right here, you see 3 ways here. You come right here, you see divergence in this high, and again, you see divergence in this high. Now, this is too small right here in some degrees to be laboring. This too more to be laboring here. So right here, it looks very corrected. That's what we were using the other days. Remember that we got this peak and we were trying to enter around 135.60. We're going to activate that trade again, because if this is flat, it needs to get down there. But let's see and play. Now, let me show you a close, which is the Euro CAD. You guys going to say, why the Euro CAD? Because I remember we did a video, help me with this, ISA DVs, I know you guys remember, about the Euro group a long time ago. Remember? And we mentioned how when the euro was around 130, 131, 132, we did a video. I wonder you guys can watch it. We did a video. It's in YouTube. You go to Elliott Wave Forecast 1. I'm going to put it for you on the run. And one of the reasons that we mentioned why the euro is going to get strong when the people were saying was the world was coming to the end was the euro cat. Look, guys, euro cat. Euro cat. What do you mean 38? Now? Okay, the euro cat. Look, it looks like a possible five-ways move right here with a triangle here, but this looks corrected, guys. Look, 1, 2, 3, 1, 2, 3. When he break the high here, this looks corrected. This is telling me that risk is coming higher. Now, I don't think that this move has reached yet the minimum target, which is it reached the minimum, it bounced from the 50, but also it looks corrected. So this is telling me that this is a buy around 37. I think that Dwayne is here tonight. Dwayne loves this pair. I know he loves this pair. How you doing, Dwayne? Long time no see you here. And this is bullish to 150. If you take a look at the euro pound and the euro cat, you know what I mean, Dwayne. I know you like this pair. Look, this is what we have on the dailies. We have W, ABCS to the 618 of W right there, and this is 1. We need to get on the EuroCAD these two legs sat. Remember that we were talking about this trade long time ago. Now this pair needs to go to 150. So technically this is telling me that another move in risk is coming. Look, the move on the euro. Remember, euro is the leading pair in this close. Most of the time, when euro trade higher, this pair trade higher. If you do an overview, let me do it for you guys, an overlay, I'm sorry. Look at the daily and the weekly. Look at the weekly chart of this pair. Let me take this. It's a very good defined structure on the weeklies. Look, you're assuming this is from 1992, 8BC, a clear tree, 8BC, a clear tree that went to the 618 of the previous tree right there, look, to the pit right there. And now this low needs to be broken because this is a 3. So technically this pair is going to trade below 124. And that's why we believe we're favoring the idea of the lower euro also. Now, it did right here the first leg of A. So technically we are correcting. We are right here now of the Y way. Now, this pair has not correct enough to mean that this correction is completed of this way. That's what we say 150. Now, that's on the weekly. If we take the same look on the daily, you have 1, 2, 3, 3 backs, and then you need equal legs to the outside, right? At least 147. And then if you go to the weekly, you're going to see how 150 comes in place around every every number right here. Right here you have the count from the lows. What you have, this is A, and then you have the first three higher, S, and then what you have right here, you have WSY, when you have, this is A, and then you have three backs, and then now it should trade higher to 150, when you're going to see that from here you have let me put another W, so it doesn't matter right now. You got a double side, A, B, C, W, and then you got S, and now you are in the Y way. The Y way, you're going to see you have to measure these two. That comes to 150. You have to measure these two from the 618. You're going to see that comes to 150 and that 1618. So technically, this is telling me that in some degrees that the euro is going to get strong. That's why we favor in the scenario that the euro is going to get strong in either the C way or this scenario. And I want you guys to understand one thing. The euro, in our view, it goes either in this scenario when it is a flat, no, this is a triangle, but we are not favoring this one even when it's possible. We're favoring a higher euro. I don't know, guys, I'm sorry. I know that I'm like contrarian. Maybe this is a scenario. A, B, C, A, W, S, Y, and we're going here, so technically we are either here, it's too early to tell when the euro can test the high, or this scenario, which is that weekly triangle that everyone knows about it already. It's this one right here. Yes, S&P perfect. 1 second. Look, A, B, C, either to 145. Now, a question there is, what about the S&P? It's on the side, my friend. You can check it there. Look, S&P is a toss. Either is this one, which is the principle on to prove you wrong, when you have A B completed here and lower, or needs to be this one. Is this one. When you have A, B, C, W, let me put W so you guys don't get confused. It's all right. A, B, C, W right here, or A, B, C, B and the flat, and then A, B, and C to around 1,500, 14 and change. Is that being the case? Something like maybe, depends on where, 1,400, you see it now? But to be honest with you, that's my favorite scenario. Now, that I'm going to buy the dollar Monday and Tuesday, absolutely. I can be wrong. But seeing the whole spectrum of the market, it draws me to believe that that can be the case. Then finally, let me show you one thing, which is the Euro Index. And then I'm going to open to answer you guys any question that you guys want. Liv, this is the Euro Index. Exact, this is the Euro Index. If you go right here, let me erase some things, 1 second. What we did from May 4. 1, 2, 3, 4, 5. What we have right now, 1, 2, 3, 4, 5. Now, if this, I'm not that good with this profound. If you take a look at this time right here, question is this the whole correction? If this the whole correction of the move from May to October, I believe that time-wise is kind of small. Now, can be the case that ended here and this is a flat, agree. But this looks corrective and a print about, remember, this is 142.50. A print about this high, we open the case technically, this looks corrective. It can be a flat, but this is very deep on the Euro index. So put that in consideration that ideally the Euro index, even though it reached the 109 that we were, that is the 50%, yeah, I'm going to cover it right now. That's another clue right there. That's a good point, Aussie yen. That I would say that don't get surprised to see the Euro index around 111. That's going to be 147, 146 in the Euro. But this looks, if you guys take your bias out of it, and you look at this without seeing all this stuff right here, I would say that this is a clear bullish structure into a C wave. Do you guys agree, right? Only looking at this structure from here to here. From here to here, it looks bullish, in my opinion. What do you mean that looks bearish? Which pair? Aussie yen? I'm going to cover it right now because you know that relationship between Aussie yen and the indices and the S&P on risk in general. So take in consideration that what we're saying can be possible is this. And then from here is when the Euro index should drop. But it can be a flat from 104 from here No, what I'm saying is that you have 5 swings from the top. 1, 2, 3, 4, 5. Automatically, when you got 5 swings, you need 3 swing back. Now, this is a 5-way move right here, without question. Right? Now, the only way that you can become this a bearish if instead of ending here, ending here, and then you have A, B, C flat, but this looks like a 3-way here, unless it becomes also the S scenario with a flat. Now, time-wise, it looks like it's better 5 and C to come to the upside. Now, let's cover the Aussie yen. Aussie yen is very related with risk. Now, as you guys should know about it. What is my weekly Aussie yen? There you go. This is what I prefer in Aussie yen. It's clear that you have from here, you have A, B, C, W. So you are in the C way. I was waiting Aussie yen to get to 95 to be a sell. Now, what you have from the lows right here, A, B, C, that's A, B, and then A, a flat B, and C. When you're going to see that C is the 618 of A, right there. Look. Now, this is W of higher degree. You have a 3-way. Then you have a 3-way down, 3-way high, and now it looks like B ended here. You follow me? If B ended here and this is being tested twice, and I want you to see this, that's the 50% or this move to the pit. So maybe what we got is a C-wave, or what we got is this, that this is S, and then what we got is a B-wave flat. You follow me, right? When you have here 1, 2, 3, 4, 5, then you have 3, 3, 5. You follow me? No, that's correct. I don't think so. This, yeah, it's possible. This took 79 weeks. It went to the 2%. This took 76. Yeah, in some degrees. It can get compressed. That's why you see that we put an alternative S at the lows right here. You follow me? Now, if, to put in simple words, if this is S, then it's the most bullish scenario on the S&P, and the S&P is going to go to 1400, and then you're going to see probably right now we ended S, we're working on the B wave until here, and then we're going to get 1, 2, 3 to 95. That should be 1400 in the S&P. You follow me, right? You need to always, if you trade risk, oxygen is very, very, always going to tell you what the risk trade is going to do. That's what I like in that pair. And finally, guys, to open question, sorry to ask it, be saying, look, Aussie. Let me show you Aussie on the weekly. Aussie on the weekly, all you need to matter is from here. I'm going to put the candlestick so you guys can see it better. I'm going to open it. And I want you guys to count from the lows how many swings you have. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You need a 13 to be an import. So if you play the Fibos, you're going to see at the 2618, you enter right there, wave 3. You're going to see at the 3802, you end the wave 4. That's telling me that from here to here, there is a cycle. Now, from here, you have 1, 2, 1, 2, 1, 2. So you got 3. And then you got another 1, 2. So you got a 4 nest. From here, you have 1, 2, 3, 4, 5. You close a cycle. 1, 2, 1, 2, 3, 4, 5. You close another cycle. 1, 2, 3, 4, 5. You close another cycle. 1, 2, 3, 4, 5. You close another cycle. Completed. Now, from here, you notice something. Around the 23.6 bounce, technically, what you have from the lows in Aussie is a 3-way. So this is telling me that it's either W where? A teeny high where? Right here? Because it was a fly. Yeah, because it was a flat. 3, 3, and 5. I remember I called this. I remember that maybe Zach remembered that. Remember, Zach, I think that you was around at that time. that I was saying, and I can prove it that this was a flat in an 8 hours like it's today. And then this telling me that Aussie is bullish. That's why, yeah, I remember. It went DV. It went straight to the 3802. Look. I remember like it was today. I remember the divergence on the RSI calling a flat. I remember. And I've been telling that to everyone. And then this is telling me that at the end of the day, Aussie, I'll be honest with you, I see Aussie bullish. And don't get surprised to see Aussie. I'm going to say something that's going to make a lot of people mad right here. Aussie to 121. Don't get surprised. I would go with 114. But that's what it looks like. It looks like from the lows, 1, 2, 3, 4, 5, 6, 7, 8, and you need a 9 wave. So keeping that into consideration, wow, no, I don't think it's happening. Because if Aussie is going to go to 142, oh my gosh. I mean, this is a scenario, guys. This is a scenario I got you guys to understand. This is the only bullish scenario technically on the dollar. This is the only bullish, which is the next. And I tell you the truth, is at this stage the less likable to happen. And then that's why you guys see on the service that we're presenting 3 scenarios on the dollar. One is being that one. This can be the case also. A sideways move for the next 2 years when you have a sideways move. This is the 3802 from here to the pit. This is 3802, I believe, from here. It was so good. It was so good, FIBO-wise, look to the 1.618. So no question in my mind that from here to here, look at that, Lewis. 1, 2, 618, 1618, 3802, 618 on the top, on the bottom. That's a perfect five. Don't you agree? Perfect five. Now you have, like Aussie, you have 1, 2, 3, 3802. That's why I always say, I've been presenting that I know a dollar bull. Now, that in the Monterey, you have to say that the biggest, but at the end, the move, this is the worst part about it, that the move that everyone is expecting is going to happen sooner or later. Because if this is a 5 after 5, the move of that move that everyone wished that the euro is going to go to 110, someday is going to happen. Because you know what? This is going to happen even in the most bearish of the counts on the euro, on the dollar. So if this was right here, if this was 118, technically, right here is going to go to 110. That's the whole point. So don't worry about it. Set the dollar, buy the dollar after 5 this coming week. And then after, if you prove correctly after 3, you need to buy the euro with everything you have. That's my message. I mean, no matter which one it is, look, euro now 138.03. It's gapping out. Look, this is the bullish count. But at the end, it's going to go to 136.30 again, Zach. Now, the decline to 136.10 is going to define the overall count. That's the good message. That's how a waiver should trade this, no otherwise. Any question, guys? I'm done after an hour and 24 minutes. What do you think about it, DB? Yeah, short the open. It's a clear fight. That's a good message, Zach. Look. I like the B-wave fly also. I agree with you. I'm going to be selling the open, guys. Me personally, I hope that I'm going to start building a short position after the open. That's the case. No matter what it is. It's at 38. If it goes where it is right now, from 38, minimum 136 is going to happen. I believe they have two more highs. Now we should be in place like this, guys. 1, 2, 3, 4, 5. A flat beat. 1, 2, 1, 2, 3, 4, 5. And now this is a cycle that should be ending around here now. Now, this is the one that should be in place. For scalping, now should end around this level. 138 is the 2618. It should do this, going lower to the previous 4, 137.52. Higher again, lower, and another high. That's why you like to, David, right? Something like that. It looks like it did 1, 2, 3, 4, 5 here. Minimum 2 more highs. Yeah. Let me see the RSI on the 15-minute. Showing divergence already. Oh. There is an alternative, which is this. That subtract, DV, I don't know if you see it. Subtract one of the highs when you say 1, 2, 3, 4, and 5. When this is from here onto here is a cycle. 1, 2, 3, 4, and 5, like a leading diagonal on 3. And then if that being the case, what you're ending now is wave 3. Should end around 138.41 if that's been the case. And then you got another low and another high. That's the only one that give you one minimum, one more high. We should send, let's see. Any question, guys, that you guys had? How's the game, Luis? I'm watching it and from the outside right there. It's winning. Miami's winning, right? Okay, guys, any question? I think that we have covered everything. Okay, that's good. No question. That's good, good. That means that we cover everything. So, guys, let's leave it there. We're going to have the recording later around 6 or 7. It takes a while to the process. And let's see how we come. But you guys need to understand what we say. That dollar weakness should happen at the beginning of the week. After this cycle that started, or in the euro case, around 138.40, 134.80 should end. All right? Leave it there. I'll talk to you guys later. Thank you, man. Bye to everyone.